If you just open an IRS letter and you owe $50,000 or more, stop scrolling because what you do right now can protect you or it can make things much, much worse. First, don't panic. Take a breath. You're not alone and you're not out of options, but what you do next, the next 7 to 30 days can make the difference between a manageable resolution and the IRS moving forward with levies, garnishments, and liens. In this video, I'm going to tell you what you should do before you call the IRS in a panic and before you agree to a payment plan that you can't afford, as well as what you need to do to successfully move forward. Hey, I'm Bob Jablonski, an enrolled agent and certified tax resolution specialist. I help taxpayers across the U.S. who owe the IRS, especially those who owe large amounts, $50,000 and up, and I help them get compliant, stop collections, and to resolve their IRS tax debt the right way. First, here's the biggest mistake people make when they get an IRS letter. They call the IRS immediately and say, "What do I need to pay each month to make this go away?" Well, that sounds responsible, but it's often the worst thing to do because the IRS may push you into a payment plan that's too high, and once you default, the situation only gets worse very fast. So, what should you do first? Step one is identify exactly what the IRS is saying with that notice and what stage you're in. Not all IRS letters mean the same thing. Some are early warnings, others are final notices that can lead to enforcement where you can have your money and other stuff taken from you. So what are the IRS notices that you're going to receive? Here's an example of the ladder of notices that you most likely will receive and is typical. First, you get a notice from the IRS that demands payment. It tells you how much you owe on that tax return and there's a demand for payment. This typically comes in a CP-14 notice. How do you know it's a CP-14 notice or any of these notices? Typically, when you get that notice, on the top right-hand corner of that notice, you're going to see some verbiage, including the notice number. Next, you're going to get CP-501 and CP-503. These are called what we call reminder notices, in that nothing yet is occurring where the IRS is going to levy stuff from you, but they are slowly escalating and getting more demanding. Next in the sequence, typically, and all of these are typically because you don't have to get all of them in any case. So the next one is a CP-504, and that is definitely more serious in tone. And it even mentions that they are now levying you. When you look further, what they're levying are state tax refunds, but they are letting you know this is getting very serious. Finally, you're going to get the final notice of intent to levy, like an LT11 or a letter 1058. You have appeal rights, and this is one where deadlines really matter. You have 30 days to basically to either deal with it, to get into a payment plan, to pay the amount of debt, or to file an appeal, a CDP appeal, or the IRS can begin to levy. I'm going to link in the description below my video on the final notice intent to levy. Watch that. After that, after those 30 days, if you didn't take any action, the IRS can move forward with bank levies, wage garnishments, and other levies. So the first thing you want to know is where are you in the process, because where you are determines what options you have. So step one is finding out where you are in the IRS process. Step two is to confirm the IRS balance is real. With a balance of over 50,000, I see balances all the time that are wrong because of there might be missing tax returns. You may actually owe more. There may be, you may find that there was a substitute for return filed by the IRS on your behalf, where it's really estimated based on what the IRS knows. And all they know is your income, not your credits, your expenses of your business, and so on. So it may be wildly overestimated and the amount that they've assessed to you incorrect. Maybe you've made payments that aren't showing up in your history. There's penalties. Keep in mind, there's penalties and interest that stack on, and they build your balance quickly. So you may not be aware that you actually owe this amount, and the IRS could be correct. And then there are things like CP-2000 notices and so on that occur where the IRS may have changed your balance, and it may or may not be correct. You need to make sure that it is correct. So before you panic, make sure the IRS is even collecting the right number. Step three is to make sure you're compliant. Very important. You have to get in compliant because the IRS isn't going to even work with you if you're not compliant. They won't get into a payment plan. They won't look at your settlement offer, your offer and compromise request. They won't do any of those things until you're compliant. So what's compliant mean? It means all the required tax returns that you need to file for the IRS to consider your request are filed. No missing years in those years. I won't go too deep into it, but 6 years is typically what we're talking about here. And if you're a business owner, this is most likely related to, or somebody who earns a large amount of money outside of a W-2 job, you have to make sure that your estimated tax payments are set up properly. And if you are a W-2 employee, make sure your current withholding is correct. Here's why it matters. Like I said, you can't get into a payment plan if you're non-compliant. So you're going to find yourself with a deadline to file tax returns that you may or may not be ready to complete. So you're already missing deadlines, which is going to create problems trying to resolve your IRS issue. And then estimated tax compliance is a huge issue for people who owe $50,000 or more. Many of them are self-employed, such as real estate agents, business owners, or they've had a major life event that created the problem, and they're not able to make those estimated tax payments properly. And when the new year gets filed and they owe again, it's just, once again, it's going to make your problem worse. If you don't fix compliance, even the best resolution plan can collapse. Step four is to protect yourself from enforcement. By enforcement, I'm talking about levies, bank levies, garnishments, and so on. So you want to make sure you're protected from enforcement while you figure out the best solution. Because here's the truth. When you owe $50,000 or more, the IRS is going to file a lien much quicker than if you don't. And if your case escalates far enough to that final notice, they're going to be more aggressive towards you than towards the person who owes $1,000 or $10,000. So the goal for you is to act early and strategically so that you can stop escalation, stop enforcement, and choose the best option, your best option, not the IRS's best option or the fastest option. So now that we know that, let's talk about step five. Know your best options. This is just a quick overview. I go through it more in other videos. But now that you know the stage you're in, that the balance is accurate, and that you're compliant, that's when we talk solutions. So for $50,000 balances, the most common options I see are installment agreements of some sort, where you're making monthly payments to the government to get your tax debt resolved. And that could include partial payment installment agreements, where full pay, what the IRS is looking for as a minimum payment, isn't realistic for you based on your financials. Maybe you're currently not collectible status, where you truly can't pay anything today based on your financials. Maybe you qualify for an offer in compromise where you are able to settle less than the full amount of your tax debt. Maybe you can get penalty abatement to reduce your penalties and reduce the amount you owe. And then finally, if you've gotten that final notice, maybe you're going to need to file a CDP hearing to protect your rights while you're resolving your tax debt. But the right option depends on your income, your expenses, your assets, and the IRS collection timeline. So you need that all in place before you go down this road. So to close this up, if you received an IRS letter and you owe more than $50,000, don't ignore it, but don't rush into the wrong plan. Start by figuring out what notice you received and what the urgency of that notice is, and whether or not you have CDP rights to protect yourself. Next, confirm the balance is accurate, get compliant, and then choose the best solution based on your situation, not on what the IRS is trying to push you into. If you want help reviewing your IRS letter and building a plan, you can schedule a consultation with my office at Jablonski Tax Relief. You can call me at 972-821-1991 and we'll get you on the calendar, or click the link in the description below and get directly on my calendar. Finally, like the video, subscribe, and comment below what IRS notice you received, and I'll tell you what it usually means.